Welcome to Multifamily Insights. I'm your host, John Kasman, and I want to thank you for joining us for another great episode. If you're enjoying this show, do me a favor, leave us that rating and review. It's really a favor for you, right? That way you get a chance to tell me what you love about the show, but also anything that can help you with your investing goals. And listen, if you haven't done so already, be sure to hit that subscribe button so you don't miss an episode. We've got a great show today. We're going to be talking to August Biniaz. August Biniaz is a real estate developer, fund manager, general partner, and a real estate private equity thought leader with 15 years of experience in real estate. Now, he is the co-founder of CPI Capital, where he acts as the CSO and COO, working with operating partners across the U.S. Now, he was instrumental in the closing of over $200 million worth of assets since its inception. Let's welcome to the show, August Biniaz.
Thanks for having me, John. Excited
Absolutely.
to be here. Add value to your audience, my man.
I love it, man. Listen, I went over your bio at a very high level. Why don't you take 2 to 3 minutes and give us a little bit more context on your background?
Yeah, no, absolutely. Yeah, my background really starts in real estate 16, 17 years ago as a licensed broker, as a real estate agent. I wouldn't say I was best at being a real estate agent, but I was great at finding deals. So I started doing small fix and flips while I was a real estate agent. And my focus eventually pivoted to more focus on, investing in assets, investing in real estate rather than brokering real estate. Started my own general contracting company, started building homes from the ground up, both custom and spec homes. Always wanted to scale. A deal came across my desk, which was a larger ground up development project, a townhome unit project that came across my desk. Didn't have the equity to close on it myself, reached out to some investors, not thinking anything of it, but we were making money on the buy. And I was able to raise over $5 million on that deal. I didn't have the background or experience to construct a project like I was doing with single family. So I brought in the architect, I brought in the GC, obviously I brought in the investors, and we structured the deal in a way that I would get a portion of the profits relative to the performance of that project. I fell in love with this concept, this idea of finding the deal, finding the investors, bringing on all the professionals and getting the piece of the profits. So I spent the next little while after that educating myself in the world of private equity and capital raising. And I soon realized most of the content that was coming at me was coming from the US. I'm located here in Vancouver, Canada. So I'm like, interesting enough, all the information, all the educational information, most podcasts, most YouTube shows, most books are authored, from people in the US. And I realized that rather than ground up development, they were more focused on buying already built, already performing multifamily assets with a value add component. And this wasn't a business model that really worked here in Canada because the rent to value ratios are so low, it doesn't allow for cash flow. So I fell in love with that model and again, spent some time educating myself on US real estate. I was very focused in my area. I wouldn't even deviate and go to other cities. I was very focused in, a sub market of Vancouver, which is Richmond. And I didn't even want to invest outside of Richmond. And when we were talking about investing in Florida or Texas, it was just outside this world. So I had to get myself comfortable with doing so. Eventually co-founded CPI Capital. We've done 3 deals so far. I have our 4th deal under contract. And yeah, I kind of leave it there and let you steer the ship here.
I love the background, man. You talked about really having a career from a brokerage standpoint starting off. You had a knack for finding deals. You took that into really more of a, finding the deal, build it out yourself, doing some development deals, built your own GC firm. And then you kind of started to realize that there were some different ways of structuring deals, particularly through syndications, but that really wasn't happening in Canada. And you're based in Vancouver and you were really focused on your backyard. So you then had to really relearn how to invest in other markets. And you've done a few syndications at this point and looking to scale that business from here. I want to start really where you mentioned that you raised $5 million for a development deal. Was this the first time you raised capital for a real estate project?
No, on single family, as a broker, as a builder of single family homes, I would source deals and bring it to my family, friends, and business associates, and we would, I would be the person who sourced the deal, the builder who was building the project. So I was very hands-on, and then my friends and family would come invest with me. So I had raised capital in that sense. But as far as raising millions of dollars, this was the first deal that I really raised significant amount of capital on one project. I didn't know what syndication was. I'd never even heard of the term before. I didn't understand the GPLP structure. So all we did is we incorporated a company, we put shareholder agreements in place, and part of that shareholder agreements is stipulated that I get a portion of the profits depending on how well the deal does. So it was very elementary, very early on. Even though it was a large project, we weren't very sophisticated when it came to syndicating deals. So that was really the start and impetus of me getting involved in this space.
Yeah, so on that first one, right? I mean, you mentioned you had some experience working with friends and family on some of the development deals you were doing, but this was the first time you kind of had a coordinated, large, significant raise, multi-millions of dollars for a deal. What gave people the confidence? I mean, how did you present the deal to them? What was that process like to go ahead and raise $5 million for this deal?
Yeah, I think I had a few different factors. I think obviously luck plays a very important part as well. It was at market timing. I put the project under contract, and by the time I brought it to my investor associates, we were making money on the buy. So it's always great when you bring a deal to investors and the deal's under contract for a lower price than the current market price. And they were sophisticated guys. They saw that. It was my experience and background in real estate, construction, development that gives them some confidence as well. And then it was just other members of the group. Now, keep in mind, this wasn't really a syndication. This was more of a JV. So it wasn't passive investors who were coming on and investing and that kind of low point of entry of 50K, 100K or 150K kind of numbers. This was 5 partners who came together and funded the deal, and they all played an active role. So, but yeah, to get involved in the syndication world or real estate private equity world, this was a really important and pivotal step for me, having closed on that deal.
Yeah, and I think it's important to note because you talked about the experience you have, and one of the things we like to talk about is, if you're looking to attract capital for deals, well, you have to have credibility, and even though you hadn't put a deal specifically like this together before, you had experience both being a broker, having a knack for finding deals and being able to communicate why this is a deal. You mentioned that, from the time you got the deal into contract to the time you presented it to investors, they could see the value that had already been created just from that appreciation. So even though you hadn't done it like that before, you had a lot of credibility going into it. They knew what you were doing from a GC standpoint, and that made it easier to invest with you. So that's just a little insight for anyone who's looking to go out there and do it. Not to say that you have to have the kind of background August does when it comes to, construction and real estate, but you should have some sort of credibility. And you kind of mentioned it there, but you also had other partners around you who had experience, and you were able to bring those people into the fold. And that kind of made people feel really good about working with you as well. Let's talk a little bit more about the syndication deals, because that's where your business is today. This kind of gave you a taste of what it's like to put together a team and leverage kind of the efforts of the team holistically. When it comes to the syndication space, tell me a little bit more about kind of the way you operate and kind of the way you grow that side of the business.
Yeah, I just got to give you some props because I've been interviewed many times, but nobody has walked through the process as perfectly, as eloquently as you have been. So I really appreciate that. No, it's very important to kind of go over what we just went over, because when I made the transition to co-found CPI Capital and start raising capital from passive investors, people that I didn't personally know, and also my network, and this is in full transparency, I thought that the conversion from people who had invested with me in the past, not only the group that I mentioned, but others over the years, people I had done business with, I thought that conversion was going to be very simple. And it was, unfortunately, it was somewhat of a wake up call where when I had our first project in Orlando, Florida, and I brought it to most of my friends, the way it was structured, because the education wasn't there, and because they had associated with me as a builder in Vancouver, the conversion was not there. And these are people who've made lots of money with me, had made millions of dollars in some cases with me over the years, very close friends. I was under the impression that, hey, I'm going to bring this deal. And a lot of time you watch a lot of videos and they talk about the number of people that know you in your circle of influence and what have you. And I thought the conversion was going to be very high, but it was a waking call for us because the numbers just were not there. And I always make a story about a friend of mine. I don't want to mention names, but If I called my friend today and asked him for $100,000, he will come to my house and drop off a check. I asked him to invest 25K in my first deal, and he said no. It wasn't because he didn't trust me. It wasn't that he hadn't invested with me in the past before. It wasn't that we weren't very good friends. It was more he didn't understand what this deal was. The confused mind says no. So we learned that early on. It was great to learn that early on. And we went on a mission to build a brand around ourselves. And we realized how important marketing and brand is. Because I was branded myself unknowingly as a builder locally here, but I was not a syndicator. I was not a US multifamily expert by any means. So we went on a campaign to build that, and this is really the Joe Fairless school of thought, which is building a brand around yourself by any means. If it's, he has a daily podcast or show that he does. So creating a lot of content, really. Breathing, eating, living this business and being involved in every aspect of it and creating content so people associate you as an expert, as a thought leader in this space. And, we end up spending a lot of time, being very active on LinkedIn, started our own YouTube show, podcast, started a newsletter, right away got a CRM to nurture those leads that were coming in, and then started adding our families, friends, business associates to that funnel, to that CRM, and kept nurturing them. Currently, we send out a weekly newsletter that updates them about the market. We write a weekly educational newsletter, other information about us, so they can see us as these active participants of this business, not just August showing up one day saying, hey man, you've known me for the last 10 years being a Vancouver builder. Now I got a deal in Orlando, and this concept of passive investing, just invest 50K and sign this 200-page document that says if I lose your money, you can't do anything about it, and I have 100% control. There needs to be so much trust there before somebody writes a check in this structure. So that's we can dissect it a bit more. But
listen, August, I love that you shared that for a few different reasons. But I got to start with the fact that you uncovered something that I think many people struggle with, especially like first time syndicators, where they have all these conversations. They're very confident they can raise a lot of money. I hear people all the time say, "Oh, I can raise $500,000, $1 million, whatever it is." And then they have a deal and they go out to talk to those investors in the network, and it's either crickets or it's not the results that they expect. And so many of them struggle on that first raise. And you started to break it down. And here you are as a guy who raised $5 million on a previous deal. I can imagine the confidence you had to say, oh, we got this deal in Orlando, minimum investment's 25K. Sure, we can do this. This is going to be easy, right? Wrong. And you talked about the reasons why, and two big things. One was the education. These people didn't understand syndication. They didn't get how the deals worked. They didn't understand the risk. They didn't understand, how it was going to work for them. So there was an education that needed to take place, and you started to work through that process moving forward. I think that's a great insight for you to share, because it doesn't matter what you know. If they don't understand or they don't think it, they're not going to be comfortable making that decision. And the second part that goes right with that is your own personal brand. While people saw you as a real estate investor, they saw you more as a developer, particularly a Vancouver real estate developer. So if it was a Vancouver real estate development deal, I'm sure you would have gotten more interest, and people would have said, sure, I'll invest in you. I've seen what you've done in Vancouver real estate. But now you're going to the United States. You're going to Florida. I don't know what you're doing. There's an apartment deal. It's already there. I'm out. And I think that's really important, because we have to make sure that we are building our own personal brands. And I tell people all the time that a brand is not what you say. It's what people think about you, right? It's not what I say about me. It's what other people think about me when they see me, they hear my name, when they understand that. So that's your brand. And you have a brand, whether you're consciously developing a brand or you're unconsciously developing a brand. So if you want people to understand that you are a real estate investor, not just a real estate investor, but you're an apartment investor, or a multifamily investor, or a hotel developer, whatever it is, you have to make sure you show up that way. You have to make sure you communicate these things, because that's the only way they're going to make that connection. So if they know you as a real estate agent, okay, I know you as a real estate agent. If you talk to me as a real estate investor or syndicator, well, you got to make that transition for me, right? And I'll give you some leeway, because you're in real estate at least. It's not like you're going from, being in sales or something, and now you're telling people you're a syndicator. But you have to make that connection. There's a process that goes with it. And I just really appreciate you sharing that, because we hear that so frequently. And I don't think people take the time to really stop and process that you just can't wake up and do one thing. And there's a process to make that transition. And you can get some latitude. Not to keep harping this point, but I like to think of the Apple brand, right? Apple is known for so long for making computers, and they did that. But when they went to the iPod, that was a little bit of a transition. It was like, wait, what? Apple's making they're making music players now? What? But then they got it, still in the technology space. So we got it, we gave them credit, and they did a great job. Well, then they went from that to the iPhone. It's like, what? You're making phones now? It's like Nokia space, right? That's like Samsung space. But they had a simple design. It kind of played into the rest of what they were doing. So they got some credit. But we've seen so many other companies and brands go from one area to another, and they did not get that credit, right? I mean, Nike's a great brand, but if Nike started making telephones tomorrow, we would all probably scratch our head and say, I don't want a Nike telephone. What does Nike know about telephones? So I think that's really important when you think about the branding. It's what you think of that brand based on the information that they've put out. And you have the ability to change that. Just like we saw at the Apple brand, they had the ability to change and expand what people saw them for. So you have that ability, but you have to be very strategic in your messaging to make that happen. Let's talk a little bit more about how you did that, right? You mentioned that you had the newsletter, you're sending out emails, you're doing the YouTube videos. I know that you host a meetup as well. Talk to me more about kind of the structured approach to really start to put yourself out there as a multifamily syndicator.
Yeah, I'm more than happy to go over what we have done, and I will in a moment. But it's also important for people who are watching who want to get into the syndication space or who want to scale their syndication business, is that you have to kind of take an internal look at yourself and see what are your personal assets. If you're terrible at speaking on stage, that probably shouldn't be your gig, right? Or if you're just not comfortable in front of a camera or what have you, or your writing skills are just not there. So you have to leverage your own assets, what you're good at, right? If you're good at organizing events, that's something you should do. Now, the advice, again, is to do as many of these strategies as possible, depending on your capital investment amount. So to start a real estate syndication firm, to start a real estate private equity firm, it is a costly endeavor because you're not really working, or you're reducing the time, the hours that you have to work on your regular job. And then you have to allocate that time to building a company. But then now you also have to make investments in doing these different strategies. Putting a podcast or a YouTube show, there's a cost associated with it, of course, cost of time, sweat equity, but also monetary cost as well. So you have to figure out what is that cost you're willing to put into a project, but it's about creating content. So obviously a podcast, YouTube show, that is very important, huge. So that's one recommendation. That's what we did early on. It's also the fact that when you have a podcast or a YouTube show, and either if you're doing a show by yourself and you're gathering information, doing research and giving that information to your audience, in doing so, that educates you, that makes you a master of your craft. If you're interviewing expert guests, every time a guest comes on, you're learning more things about it. We've interviewed over 130 expert guests, and we've learned so much from our guests. We've partnered with our guests. Our guests have invested in our deals. So it's created a great partnership with us and the guests who've come on our show. So there's a lot of positive that comes into having your own podcast and YouTube show. Again, the costs are very reasonable these days. I would also say social media. Now, we're very focused on LinkedIn. So having a proper LinkedIn page profile, the SEOs are so strong on LinkedIn. As long as someone doesn't have a generic name, a simple Google search on their name, their LinkedIn profile pops up first. And somebody who clicks on that can see their LinkedIn page is like their personal brand, as their personal website. So LinkedIn, very important. And then you got other things like creating content on LinkedIn. Another stat about LinkedIn is that only less than 1% of LinkedIn users post regularly, unlike Facebook and Instagram. So you get noticed a lot easier on LinkedIn. It's also very professional. You have people that are either looking for connecting with other business professionals. You have experts and business people on this platform. You don't really have the crowd that's on Instagram, for example. Not saying anything negative about Instagram. We have an Instagram account as well. So LinkedIn is huge. And then you got LinkedIn outreach, where you can either bring your own team or hire a virtual assistant who can reach out to potential investors, clients, other stakeholders that you can partner with through LinkedIn. So podcast, YouTube show, LinkedIn. You have chance on speaking on other people's podcasts and YouTube shows. Again, the market isn't done on your behalf. You go out there, you add value, you provide information that creates another another strategy to connect with investors and others. And then you got, meetup groups that you can host and again, add value to your audience, or hosting webinars. Again, these are live webinars where you speak about something you've researched or you bring on an expert guest. So you have all of these different strategies on top here in an attempt to build a brand around yourself and then get people to come into your funnel. But now that you've brought them to your funnel, there's got to be also a nurture process. Like I was describing earlier, you have a CRM, where the person came in from, you have the KPIs, but you continue to provide information for these people. So eventually when you have a deal, they'll know you, they'll like you, and they'll trust you to invest with you. This idea of just meeting someone saying, hey, this is a deal. It's a great deal. Come and invest with me. Sure. How much is it? I'll write you a check. It's really not there. There's so much information coming at people for investments. There really needs to be that know, like, and trust before somebody makes an investment. And they really have to go through this journey to get to know you and to get to really understand your business model. I have people who've been connected with me, people I know really well for a couple of years on LinkedIn, and they're still not sure exactly what is it that I do. And that's my failure because, I haven't done a good enough job. Sometimes they think I'm a broker. Sometimes they think I'm a developer. Sometimes they think I'm a financial advisor. And a lot of time, the first few minutes when I talk to someone is explaining what it is that I do. So it's very important when you build a brand, other people knowing exactly what it is that you do. Because first thing that comes to people's mind is, what's in it for me? What is this person? How is this person going to add value to me that they're even worth for me to invest my time in learning about them? And that those marketing strategies and the nurture process does that work for you. So by the time they get on a call for you, the chances of them investing with you is much higher. Last point on this is that the syndication model that's usually utilized in real estate, there's a main differentiating with syndications and funds. So a fund is a loose term, the word fund. A syndication is a project-specific fund, really, also. But when you talk about a fund that continuously raises capital and continuously allocates the capitals to deals, somebody could be raising it all the time. Syndications, that's not the case because we are opportunistic. We look for deals and we put a deal under contract, we create a marketing material, and then we send it to our investors. So there is periods of time, even larger firms, that they don't have a live deal. So if an investor comes to your funnel and you don't have a live deal you can present to them, they need to stay in your nurture in the nurture process and learn more about the past deals you've done, what type of returns you've achieved. So then when you do eventually have a deal, they'll feel comfortable enough to come on and possibly invest with you.
August, you gave us a lot of great insights right there. You started by talking about, this is all marketing and all strategy, right? So you have to put yourself in the best position to be successful. If you are a shy person, if you are not comfortable in front of a camera or in front of a microphone, do not pick something where you're going to be standing in front of people as your way to connect with people, right? Because you're not giving yourself the best chance. If you're a great writer, maybe you write a blog, maybe you focus on social media content, but put yourself in a position where you can help educate people. And I think the key in what I heard you say was it's less about you and much more about educating other people, nurturing them so that they get the answers they're looking for, so they can be comfortable, so they can ultimately make a decision of whether or not this is right for them. And it's okay. This shouldn't be a pressure position. You shouldn't be trying to force anybody to make a decision. It's not a sales role, but you should be able to educate people so that they can decide for themselves whether or not passively investing can help them achieve their own financial goals. And the way you do that is simply by providing information through the various touch points that you've mentioned. The other thing that you didn't directly say, but I think is really, really key, is you started by saying that you worked with friends and family, people you had, invested with before. And when you were doing your development deals, those are the people you went to. But now we're talking about a completely different group. Now we're talking about creating webinars and being on LinkedIn and basically taking strangers and making them friends, making them connections. And I think that's a powerful tip too, because this means that the average person, the average professional can expand their network. you don't have to have multimillionaires in your database, right? Like when you did that first deal, you raised $5 billion. I mean, you have five partners at $5 million. That's on average $1 million person, right? Your typical investor doesn't have five people they can go to and say, "Hey, bring $1 million and partner with me on this deal." But they can leverage, LinkedIn and meetups and a podcast and all these other platforms to connect with people and maybe raise or attract $50,000 from a person. So I think that's really powerful to understand that there are a lot of different ways. It really, I don't want to say it doesn't matter about your background, but more people have the ability to grow their connections and network and raise money for these deals than just having somebody who could stroke a seven-figure check. So really great insights there. I want to run the clock a little bit here, August, because one thing you talked about was as you learned about this business model, it wasn't really prevalent in Canada. So as you started to learn more about the US market and syndication, that kind of took you down that path. But help just frame this up, right? We have other Canadian listeners, and I think other folks maybe don't understand the market as well. Talk to us about kind of the Canadian market versus the US real estate market.
Yeah, Canadian market and the difference between U.S. market is just the size, right? The U.S. market is 10x the size of the Canadian market. Americans are much more they're much more mobile than Canadians are. That at times they live in Texas, then they live in Florida. So you have that interstate migration that's taking place in the U.S. as well. 10x the economy, like I mentioned, and also the investing culture is a lot different in the U.S. Canadians are hyper cautious; they're very conservative. Americans are, this idea of investing is much more common in the U.S. And then on the real estate side, again, it really goes down to cap rates, to yields. U.S. deals have much higher yields than Canadian deals do. Canada is also a very large country, second largest landmass country after Russia. Most of Canada is unlivable. So the areas that are livable, like you're talking about Vancouver and Toronto, you really are landlocked. The possibility of being able to the rental, that's kind of the concept of multifamily value add or rental yields is really non-existent. You're in negative cash flow most of the deals you do. So you're really looking for that natural market appreciation to achieve that. So that's really the main difference between Canada and the US. On the regulatory side, they're very similar when it comes to raising capital in Canada and the US, with some differences, but overall very similar. You have a lot of Canadian Canadian pension fund partners with Greystar regularly to buy and build US multifamily. So you have billions of dollars on institutional and retail side, which are being invested in the US from Canada. So to my research to date, US has one of the highest rent to value ratios in the world. In most cases, you guys have the 1% rule, where the 1 month's rent equals to 1% of the asset value. If you compare that to here in Vancouver, you're at 20 basis point. You're at 0.2%. So you're in extreme negative cash flows. And then the median income compared to the median home price in the US is much higher. In Vancouver, a median home price is 1.3 million. Median income is 90,000. So it's very difficult for people to own a home. And it's the same thing around the world, but in the US, the ratios are not as high. So it's a great place to invest. Largest economy in the world. So for me, really being in business, it was a no-brainer investing in the US as we're chasing yields and opportunities.
I think it's great to hear you say that, because as Americans, I think many of them, I should say us, we don't necessarily compare kind of real estate here to real estate in other countries. We kind of just all focus on kind of our local markets. But that gives us some context of why so many other investors, Canadians, Australians, French people, they are looking to invest in US real estate because of the things you just laid out. And the truth is, it's very difficult to invest in real estate in many other countries. And that's what makes US real estate very appealing. And that's also part of the reason that we continue to see so much demand for US real estate. So it's just good to hear that, to have another lens for what's driving this market. Not to say that every deal is purchased by someone who's not in the US, but I do think it's important to understand and have some context to how US real estate stacks up against real estate in other countries. With that said, August, the one thing that you started talking about was CPI Capital and how you kind of built this out. We've talked about kind of all the different platforms that you leverage to connect with other people. And I want to just, dig a little bit more into CPI Capital. I know that you kind of play a role as CSO, which I believe is Chief Strategy Officer, but I'll let you confirm, as well as the COO. And talking about just, your team, kind of, how you all came together, a little bit more about that partnership.
No, absolutely. Yeah. The CPI Capital is a growing company. I wear many different hats within the company, like any newer company. So co-founded a company with my partner, Ava Benesaki. She's the CEO. So we're very focused on the marketing side, creating a lot of content on the educational side for our investors. So very focused on the investor relations and the capital side of the business. We initially utilized the co-syndication model where we're partnering with U.S. operators, again, because we were not boots on the ground. So it made more sense to partner with operators in the regions we want to be in, and we came in as a as a co-GP or co-sponsor basis, brought in a portion of the equity needed, and played an active role in the project. But the plan was not to be capital allocators or equity partners in deals. The plan was to build a fully functioning real estate investment firm, which has three main components. You got the equity side, the investor relations, raising capital. You have the acquisition side, which is sourcing the deals, relationship with brokers, underwriting, physical due diligence. And then you got the asset management, which is executing the business plan. So our focus initially was on the equity side, because in my background as a builder, as a contractor, I had hundreds of deals that came across my desk, but the pain point was not having the equity to close on deals. So when I co-founded CPI Capital, I suggested to our team that our focus should be on building a brand on the investor relations, on the equity side, because no matter how good we're at finding deals, not having the equity is going to be a big pain point. Moreover, I feel that starting out real estate private equity firms, the ability to hire or even in some cases poach a acquisition director or your acquisition guy is there. You can hire someone and bring him on as an acquisition director. You can bring on an asset manager. A lot of great people out there who can do work as an asset manager, even bring them from other companies. But it's very difficult to go and hire someone who's going to go out there and raise $20 million for you. Sure, there's capital brokers out there, but the cost of capital is pretty high for that. So building that brand was very important for us. We've got to a stage now that we're the lead sponsor on our current deal in Tucson, Arizona. We're the lead sponsor, so we've sourced the deal, we underwrote it, we did the market analysis, we marketed the deal to our investors. So it's really been a growing journey, but we're on it and appreciative to the investors who trusted us in our journey and looking to continue scale and grow.
I love it, man. And I appreciate you sharing why you decided that pathway on the equity. And it makes a lot of sense, particularly if you could focus and lock in on one aspect, get good there, partner with other people who can maybe supplement that skill set. And then you can build it on your own business and then kind of take it over, which is exactly what you've done. One question I wanted to ask is, you talked about as you've built CPI Capital, and obviously I know you're in Canada as well. Are there any limitations that you saw investing in the US, whether it be with you and your company directly or even with your investors? Are there any limitations or challenges that you have to overcome just from not being a US resident?
No, really. I mean, the limitations was just learning the education side of it. We've probably spoken to over 40 cross-border CPAs, accountants, and tax lawyers, and securities and corporate lawyers. Interviewed many of them on our show. Every lawyer has a different opinion. Every lawyer has a different strategy. There is a consensus about the main strategy to use, which is not using LLCs in the US because they're a hybrid entity that are taxed and recognized differently by CRA, Canadian Revenue Agency. But other than that, every lawyer has their own strategy relative to your needs as a company. So we wanted to be able to raise capital from Canadian investors and from US investors. We wanted the opportunity to be able to partner with co-GPs on the US side and the Canadian side. We didn't want our Canadian investors having to file US taxes. So that our structure had to be created for us and our needs. So, other accountants, they were suggesting other structures that didn't make sense for us because it didn't help with all the needs that we had. So The limitations was just the educational side of it and different information coming from different experts. So the advice here really is, it doesn't matter even if you're in Canada or the US, is getting second opinions. And you see this in the medical space. Sometimes you go to the doctor and then you go get a second opinion. In business, get 3, 4, 5, get 5 different opinions, and amalgamate all of that and come up with the best strategy. You get a free call with an accountant and a lawyer. Your first hour is free anyway. So utilize that time and learn, even if it's a paid call, is really worth the bang for the buck. So that education side of it, being in real estate for 15 years and coming into the space, thinking I know everything there is to know about real estate and investing, and really being a humbling experience. That was the limitations. As far as the process to invest, America is the head capitalist of the world. If there's a possibility to get people investing into the US, they'll create those processes both on the institution and retail side. You're not going to have any difficulties there. Countries usually make it hard to get money out of there, and Canada and the US, 80% of our trade is done with the US. The processes are there. It's just finding out what's the best system to use for your company. But yeah, no real limitation on the regulatory side, on the tax side, on the corporate side. It's very streamlined.
Listen, I love the fact that you shared that, because while there may not be huge regulatory things, there are definitely some nuances to set up from a tax standpoint. And you want to make sure you talk to CPAs, and that tip of make sure you talk to multiple people. That is key. Talk to multiple people, but also talk to people who have experience doing this. I think a lot of times people just go to their CPA, and their CPA may have very little experience in this space. Don't let a title like attorney or CPA fool you or trick you into thinking that that person actually has the best information or the most updated information on how to structure something. So talk to multiple people who have done it, get the recommendations and references from those people who have that experience, and then you can build your decisions from there. Thank you for sharing that information. For people who want to learn more about you, CPI Capital, or some of the deals you have, you can go to cpicapital.ca. Again, this is in Canada, so .ca. And you can check out more from August and his team there. We're going to move on to our round of insights. You ready?
Ready.
All right. Give me a failure or an apparent failure that set you up for later success.
Ooh, failure that set me up. I mean, man, I've had a lot of failures. So I guess since we're on the same conversation, the failure was doing our first raise and expecting that, everybody who had invested with me and made a lot of money in the past would jump on this new idea or this new concept, and I didn't take enough time to educate them about what it was, and just expecting people to invest in me because they've known me for a while and that because they've made profits in the past. So I think that was a big learning lesson, and it allowed us to really educate not only our people who are already in our network, but also others who are coming into our network, educating them about what it is that we do and how are the profits shared and how are the liabilities and everything else.
Give me a digital or mobile resource you recommend for your business.
Ooh, I got so many of them. So I gotta give a quick funny story about this. I was building single family homes. I had my site superintendent working for me. He had taken a sick leave, and I brought a kid from BCIT, British Columbia Institute of Technology, and I was giving him his to-do list for the day, and I'm like, here, there's the email, there's your to-do list. And he looks at me and is like, you don't have the software for this? And I felt so embarrassed the way he said it, because I'm like, who's this kid telling me how to do my business? As soon as he left my office, I spent hours online trying to find the software for the way I manage my business. And I ended up finding this software called Asana, which is a task management software. But the softwares have not been part of my life. I have so many different ones. You got Asana, which is a task management software that's got new bells and whistles every day, and I've been on it the longest than any other. Slack is great. HubSpot is our CRM, but if you want to get into syndication, I suggest Active Campaign. That's probably the best CRM to use. So many software. Don't overwhelm yourself, but find the best softwares for what you need. Task management, Asana. Group task management. Slack is great. A lot of people use Slack. Project management as well. HubSpot and Active Campaign for CRM. Those are a few I suggest.
Give me the book you've recommended or gifted the most in the last year.
I would say the book that I recommend, the book that I've gifted most has been Raising Capital by Hunter Thompson. The book's title is a bit different, but Raising Capital, I believe, is for real estate. I have 3 copies of it sitting right there because I actually literally hand them out.
I think I have 3 copies right here too. So
yes.
It's Raising Capital for Real Estate.
Yes, by Hunter Thompson. The book that I quote the most and I try to live by is Who Not How by Dan Sullivan. One thing I can say about books, I know a lot of people, so we have a YouTube show, we ask a question from our guests, which is book smarts or street smarts, and these are expert people, really have done great in life, and 98% of people say street smarts. So sure, read a lot of books, but this idea of, CEOs read 5 books a week, blah, blah, blah. Sure, reading a book doesn't mean just reading it from the front page to the back page, is immersing yourself in the book. And this is a strategy I learned from Logan Freeman, who we had on our show, is when you read a book, immerse yourself. Just don't read it to connect with it. Quote the pieces of the book that you learn, understand the author, really immerse yourself in the book and use those concepts. Just by reading a book and buzzing through it doesn't really constitute reading a book. You should really go in depth into a book.
Give me a daily habit that helps you stay focused on your goals.
Ooh, I got a really good one. I got a life-changing one for you guys. It's really, and I had a what am I grateful for list on my on one of my, actually on Asana, that when I was down or I didn't feel good, I would go and read what I'm grateful for, and I would go add to it. It's really your brain learning to searching for what you're grateful for, so it keeps looking for it. The same way sometimes people think about, what could go wrong, your brain keeps thinking about pessimistic ideas, but what you're grateful for, educating your brain to do so. So what I'm doing now is, actually I learned it from a good friend of mine when we were on vacation together in Phoenix not too long ago. He was doing a what he's grateful for list before he fell asleep. That was the way he would focus and literally fall asleep, by thinking about what he's grateful for. So I started utilizing that, but I started also utilizing it in the morning when I wake up. So as soon as I wake up, I run through my mind and I think about what am I grateful for. Sounds a bit cheesy, but it's not. Believe me, from a guy who boxed for many years and he was a contractor for many years and think I'm a tough guy. It really helps. It really works, what you're grateful for, because it boosts you up in the morning and puts you in a good mood before you fall asleep. So that's something that I utilize, amongst many other things, routines of going to the gym. I go to the gym every single day. I plan to go to the gym every single day of the week. So you might think that's extreme, but if I plan for 5 days and I missed a day or 2, I end up going for 3 days. I plan to go for 7 if something comes up, and I end up going for 6 or 5 anyways. So going to the gym or some kind of sport activity, a healthy mind exists in a healthy body. And if you're not investing in your body and longevity and your health, you're losing at the game of life.
I love it, man. All right, give me your number one insight for multifamily investing.
Depends what juncture in the space you are, but learning from a guy who learned from blood, sweat, and tears, get a coach, join a mentorship. There's a lot of great groups out there. We talked about Joe Fairless. We talked about Joe Fairless. There's other groups that provide those mentorship for your needs. Hunter Thompson has his Raise Masters. You have Michael Blanc, I forgot his program, but very focused on underwriting. You have Think Multifamily. You have these tremendous organizations and groups where you're literally surrounded by others, and you can do deals with them. You can help them raise capital for the deals. You can bring deals to them. You can find your next partner. So definitely, if you want to get into the multifamily and you're in early stages, even if you've gone a bit into it and you have had some success, join a mentorship program, 100%.
Yeah, I think that's actually the best time, is if you've had a little bit of success, because now you can really get clear on what you want to take it to the next level. I think sometimes people do it first, but they're not clear on what they actually need out of coaching. So they kind of are a bit confused. But if you can get clarity as far as, hey, all right, I'm here, but here's what I need help with, then it's a little bit easier to get to that next step and identify who you actually want to partner with. But great insight there on the coaching. Let's lighten the mood a little bit. You're still in Vancouver, right?
Yes.
Okay. So you're in Vancouver. Give me your favorite place to grab a bite to eat.
Oh man, my favorite place, my mom's house every Thursday. But no.
But we all can't come to your mom's house unless you're making that an open invitation.
Yeah, no, for sure. I'll tell you guys a cool story. Actually, I live in a suburb of Vancouver called Richmond. The Vancouver airport is here, city of 200,000 people. But for whatever reason, there's reasoning out there, but a lot of Chinese people have decided to make Richmond their home. It's, like I said, city of 200,000 people, and 70% Chinese people live here. And and it's a huge Chinese influence. You go a lot of signs on stores and restaurants, it's all Chinese malls, and unbelievable Chinese restaurants. Okay, if you're not familiar with Chinese food, my wife, she's from Alberta, and her version of Chinese food was sweet and sour pork, or seafood fried rice. But Chinese people have had 5,000 years of civilization. They have more foods than the Italians and French combined. That makes amazing food. So if you ever happen to be in Vancouver or Richmond, seek out a Chinese cuisine. And every region within China has their own food. So, like, for example, I love Sichuan. It's from the Sichuan province of China, which is very spicy, and they have all these different dishes. So, man, pick up your game on the Chinese food.
There we go, man. Sound like some great options out there in Richmond, British Columbia. So we don't get out there that frequently, but I'll have to put that on the list next time we are in that area. So thank you for sharing that. Listen, August, you gave us some great feedback, man. Great information. I appreciate the honesty, man. Just hearing somebody's story who spent a lot of time in real estate, right? Being an agent, being a broker, being a developer. I mean, you kind of had the background to be a very successful syndicator, and you had some struggles. And I think that's a great, clear lesson that it really doesn't matter how much real estate experience you actually have. If the people you are talking to don't really understand the deal structure or how it works, and they haven't gotten a chance to get educated on what it is you're looking for them to do. So make sure you do that and take the time, build out a personal brand. You are building a brand whether you want to or not. I mean, people are going to know what to call you for and what not to call you for. So you're going to build a personal brand, but if there are things that you want people to call you for, make sure they understand what those things are. Just make it clear. I appreciate you breaking all that down and talk to us a little bit more about, Canada versus US investing, and also just how you are growing your business today. Again, if you want to learn more about August and his firm CPI Capital, just go to cpicapital.ca. And August, I want to thank you again for coming on the show. Hope you have a great one, and we look forward to staying in touch.
Thank you, my man. Thanks for having me.